Hi, this is the Strifor channel. Here we break down real stories from the financial markets. No fluff, no cliches, no illusions. What do a neurosurgeon, an M&A specialist, and a commodities trader have in common? They all made billions by predicting the biggest financial crises in history. Today, we'll unpack 3 legendary stories. How a doctor bet against the entire real estate market and made $700 million. How a little-known hedge fund manager earned $15 billion from a single trade. And how an energy trader predicted Black Monday and made a 300% return in one day. Subscribe to the channel if you value real experience over empty promises. And don't forget to check the description. There's a link to the Strifor platform and our Telegram channel for those who live and breathe trading. Michael Burry and the 2008 financial crisis. It's 2005. Dr. Michael Burry, a trained neurosurgeon more interested in financial reports than surgeries, is running a small hedge fund, Scion Capital, managing $600 million in assets. Burry sees what all of Wall Street ignores. The U.S. housing market is a massive bubble ready to burst. His analysis paints a terrifying picture. Mortgage loans are being handed out to anyone. People with no jobs, no income, and no documents. These are known as ninja loans. No income, no job, no assets. But how do you bet against the entire housing market? In 2005, there was almost no tool for that. Burry finds a solution: credit default swaps, CDS. These are insurance contracts against mortgage bond defaults. In short, he buys policies that will pay off if the housing market collapses. Investment banks are thrilled. They think they're selling insurance on an impossible event. Goldman Sachs, Deutsche Bank, Credit Suisse, they're all happy to sell Burry his crazy contracts. From 2005 to 2007, Burry invests $1.3 billion into credit default swaps. His investors panic. The fund loses money for 2 years straight. Many demand their money back, but Burry holds firm. He knows the bubble will burst. In 2007, the first cracks in subprime mortgages begin to appear. In 2008, the full collapse hits. Lehman Brothers goes bankrupt, AIG is bailed out, Bear Stearns is sold for pennies. The result? Burry earns $100 million personally and makes $700 million for his investors. A 489% return from 2000 to 2008. What's most amazing? Burry wasn't a Wall Street insider. He simply read the documents everyone else ignored. Turn your knowledge into real practice. Sign up on the Strifor platform. You'll get access to 250+ instruments, transparent spreads and fees, order protection up to 20,000 euros, and instant market access. As always, link in the description. The second story, John Paulson and the greatest trade ever. It's 2006. John Paulson runs Paulson & Company, a hedge fund managing $4 billion. He specializes in mergers and acquisitions, a calm, predictable niche. But Paulson sees the same thing as Burry. The housing market is overheated, but his approach is radically different. Paulson doesn't just buy insurance on the collapse, he helps create synthetic CDOs. These are complex derivatives that allow you to bet against specific mortgage bonds. His strategy: find the most toxic mortgage-backed securities and bet the maximum possible amount against them. Investment bank colleagues mock him, investors reject him, even housing market skeptics avoid him. Everyone thinks he's paranoid. But Paulson is relentless. He examines every mortgage package, analyzes the geography of the loans and the quality of the borrowers. His team works like forensic detectives. In 2006, Paulson creates 2 special funds solely for betting against subprime mortgages. In 2007, the market starts cracking. Slowly at first, then like an avalanche. Each drop in housing prices brings Paulson millions. The result shocks Wall Street. In 2007, Paulson earns nearly $4 billion personally and makes $15 billion for his fund. That's over 100% return on capital. According to Alpha magazine, Paulson's $3.7 billion became the largest personal payday in Wall Street history at the time. But the story doesn't end in 2007. In 2008, Paulson earns another $2 billion personally, continuing to short the credit market. He went from unknown money manager to financial legend in a single trade. For more stories from the trading world, follow our Telegram channel. That's where the essence of trading lives. Finally, the story of the fastest profit. Victor Sperandeo and Black Monday in 1987. Victor Sperandeo, known as Trader Vic, is a legendary trader with over 45 years of Wall Street experience. Unlike Burry and Paulson, he trades commodities: oil, gas, metals. From 1978 to 1989, Sperandeo delivers an average return of 70.7% per year with not a single losing year. But his defining moment comes in 1987, September 1987. Sperandeo gives an interview to Barron's magazine where he predicts a market crash. Most dismiss him as a pessimist. The market is at historic highs, the economy is booming. But Sperandeo sees danger: overvalued stocks, excessive leverage, and program trading that could accelerate panic. October 16th, 1987. One day before the crash, Sperandeo opens short positions on the Dow Jones index. October 19th, 1987. Black Monday. The Dow Jones falls by 22.6%. The biggest one-day drop in history. Global losses are estimated at $1.71 trillion. Sperandeo makes a 300% return in a single trading day, a phenomenal result that brings him worldwide recognition. What's most impressive? Sperandeo didn't rely on exotic derivatives or years of research. He used classic technical analysis and the intuition of a seasoned trader. What ties these three stories together? First, all three traders went against the crowd. When everyone was buying, they were selling. When the market was euphoric, they were preparing for disaster. Second, deep analysis. Burry studied mortgage documents no one else read. Paulson dissected every CDO. Sperandeo applied decades of technical analysis experience. Third, emotional resilience. All three withstood criticism, investor doubt, and short-term losses. Fourth, timing. Predicting a crisis isn't enough. You have to get the entry and exit right. And finally, risk management. Despite their massive bets, each of them knew exactly how much they were willing to lose. These stories show that the biggest opportunities come in moments of extreme chaos. But to take advantage of them, you need knowledge, discipline, and nerves of steel. Want to explore more legendary strategies and tools? Subscribe and hit the like button. It helps YouTube's algorithm show our videos to more people. We create thoughtful, story-driven content for forward-thinking traders. And if you're ready to put your knowledge into practice, create an account on Strifor. A robust platform, competitive conditions, strong support, and access to the key tools you need. Also, tell us in the comments, which of these stories impressed you the most? And which legendary traders would you like us to cover next? See you in the next video.